Many thanks for joining us on the show, Dami.
Thank you, Christy.
Let's start by taking your thoughts on the current trends globally impacting the commodities market.
Okay, so first of all, we'll discuss based on the various categories. So we have what we call soft commodities under the agricultural chain, and we have what we call grains. Now, in the soft commodities, we'll look at some of Nigeria's major imports and exports. So soft, we have what we call sugar and cocoa. If you look at cocoa prices, what we've seen in the last 1 week is that we've seen cocoa prices soften a little bit, and that's because of increased production by the two largest producers of cocoa globally, and I'm talking about Ivory Coast and Ghana. And recently, Ghana too, they're saying that they want to increase their production in the next couple of months. Basically, also, that is going to affect prices going forward. So that's what we've seen in terms of cocoa. And the thing is that because Nigeria exports cocoa, so a decline in that commodity definitely will affect the government's fiscal position. And then if you look at sugar, because of the health reasons, so there's that growing awareness of the side effects of sugar. So we're beginning to see reduced consumption of sugar.
So the feed farmers and the nutritionists, quote unquote, are beginning to impact the purchase, demand and supply for sugar, so to speak.
And then also, India also is a major producer, and we've seen that it has reduced its production also because of soft demand, and that is what led to the decline in sugar. But Nigeria imports sugar. Funny enough, despite the refineries that we have in Nigeria, we actually do import sugar, and because we import it, so that if the price of that commodity declines, that's a plus for us because in a way it's reducing our import bill. Now, if we go over to the grains, we have wheat, we have corn. Now, wheat, Nigeria imports a lot of wheat, predominantly from the US, and you also have Russian wheat, you have wheat from Ukraine. And what we're seeing in the wheat market, we're seeing that prices in that market too has declined, and that's predominantly because of increased production from countries in the Black Sea region. And I'm talking about the US, I'm talking about Russia, I'm talking about Ukraine. So because of that, we're seeing prices decline. And users of wheat in Nigeria, so the flour milling companies, livestock companies, brewing companies that use wheat, they obviously would benefit from lower wheat prices. Then corn also, we're seeing soft prices. So basically, across board, for most of Nigeria's import and export commodities, we're seeing a decline in prices. And corn, what is driving that? The U.S. is the largest producer and exporter of corn, and we're seeing that because of increased production, that as the supply has brought down prices.
And you've basically helped us to draw a connection between the global trends impacting commodities market to how we are seeing the direct effect locally. Based on your points on prices, I see here from data made available by your organization, the relatively elastic products and the relatively inelastic products. It does appear that there's some mixed movement in domestic commodity prices. Some of them are actually flat. I see palm oil. Palm oil recorded some 500 naira change, but I see new yam, medium-sized, retained the price, was flat. Same thing month on month, even for sugar, like you mentioned.
So the thing about commodities now, we're looking at the domestic commodities market.
Definitely.
Right now, it's predominantly as a result of seasonality. So these commodities have different planting periods and harvesting periods. So the ones where we've seen a decline in price is because there's abundance of these commodities, and the ones that we have seen an increase is because obviously of shortages. And most commodities, this period is the planting season, so we're going to see a lot of supply shortages, and we're going to see increase in prices. And also commodities that are grown, most of the commodities are grown in the north, so any disturbance or unrest in the north obviously affects the production of these commodities. Another factor that affects commodities is the cost of fuel. And most of the trucks that transport these commodities from the farmlands to the market, so for instance, maybe from the north to the south in Lagos State, they are diesel powered. And right now, the retail price of diesel is around 230 to 240 naira per litre. So and that is really high. So definitely that would feed into cost of logistics and distribution.
So let's look at now trading commodities on the exchange in Nigeria. We know that AFEX is at the front burner of that now, but AFEX, of course, is a privately owned commodities exchange. Now, to the government side of it, which should also be in charge, the Nigeria's commodities exchange. Much has been said about unlocking potential for that exchange within the country, and we recently gathered that the Securities Exchange Commission has now set a 7-year timeline to revive the commodities exchange market in Nigeria. Your thoughts on that?
Okay, so I think it's a good thing. Like you mentioned, right now the only functioning commodities exchange is FX, and they've at least done a good job in terms of proper pricing, because data integrity is an issue in Nigeria. So, but if you go on the FX website, you see the prices of various commodities, future prices and whatnot. So the fact that the government is trying to revive this sector is a positive sign. And what the thing is that we need price mechanism. If you have an efficient price mechanism, it will be good for the farmers, it will be good for investors. So for instance, if I want to buy into a product, because commodity is an asset class, not just equities. So if I want to invest in the commodities exchange, if I know that, okay, this is the price of, for instance, a tuber of yam across board, and then I can plan. So I think it's a good thing that the government is doing. Obviously, it will require a lot of funding, because basically it's been comatose for a while with only one company, FX being the sole player. Yeah, so I think it's a good thing, and it sends the right message to investors and to farmers alike.
Your near-term outlook for the commodities market?
Okay, so generally speaking, globally, like I've mentioned earlier, right now for the softs, that's sugar and cocoa, we expect that the prices will still remain bearish, and that's because of increased production. Like I mentioned earlier, Ghana is planning to increase its production, Ivory Coast also. And then weather is also an issue that would play into the outlook of these commodities, and we expect the weather forecast to be favorable and to support both the soft commodities and the grain commodities.
Many thanks for your time on the show.
Thank you very much.
Damilola Akinbami is the head of research at Financial Derivatives.